What's up everybody, welcome to the Stocks channel. My name is Cory and today in the stock market we continue to bounce ever since we got that strong bounce off the 20 simple moving average and we're right up to the very critical resistance zone. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today SPY was up 1.6% and we did hit that very critical resistance zone, which is going to be this level right around 384 to 385, and there's one more critical resistance the bulls need to break just above at 390. So the bulls without a doubt are pushing, and they do have a short-term bull trend of higher lows and higher highs, and you now want to look for some very critical support on SPY at the breakout level at 378. As long as the bulls are defending this level at 378, you should be staying long on this market because that means the bulls are still in full control. Below 378, you need to get a lot more defensive, and you're very likely going to be looking for support around 374 or wherever the 20 simple moving average is, because it is a rising slope. So stay bullish as long as we're above support, because this is without a doubt a very strong bullish breakout. And remember, the bulls are the ones that have everything to prove because they are going against the bear market downtrend. You can see the bear market downtrend is getting a lot weaker because the bulls are now above the resistance trend line. The price action is above all of the moving averages, and we are very close to the critical test at the risk level at 390. If SPY starts closing above 390, it's going to look incredibly bullish, so continue to watch that as the most critical resistance zone. On the Nasdaq 100 triple Qs, we're up 2.07% today, and the triple Qs also got a bull breakout above that resistance at 282, but slammed their head right into the negatively sloping 50 EMA around 284. If the bulls continue to push, you're looking for critical resistance at 288, and the bear is sitting right there at 293, so it is still a bear market as long as the triple Qs are below 293, and there could be a very real possibility that we get rejected from the 50 EMA. Downside support will be the breakout at 282 and the support trend line right around 274 to 275, and as long as the bulls are above that support trend line, they are still pushing in the short term. On the Dow Jones, we're up 1.09% today, and the Dow Jones is continuing to push higher ever since we got that double bottom breakout, and we're very close to the price target, which is right there at 320. And if we continue to push higher, look for the gap fill at 323. Critical downside support will be 312, the gap fill at 311, and the breakout at the neckline, which is down here at 303, but that is just way too much risk to take on at this point. So make sure you're managing your risk around the gap fill at 311 and the risk level at 312. On the Russell 2000 IWM ETF, we were up 2.73% today, and the Russell 2000 does have a confirmed looking double bottom just like the Dow Jones, because we did get that double bottom off of the June low at 163, and now we did get the bull breakout above the neckline at 176. Just like the Dow, we're right here at the critical risk level, which is at 178, and if we continue to push higher and we hold the support at the neckline at 176, that is going to validate the price target at the gap fill at 188, which is obviously a very bullish development for the small caps. If we lose the neckline at 176, look for that critical support just a few dollars lower at 172. On the ARKK ETF, we were up 6.72% today, and ARKK did close back over the 20 simple moving average, which was that resistance at 37, but we are right back up to the resistance trend line at 38. If the bulls can keep pushing, the next strong resistance will be $40 and then 41, and to the downside, you're looking for support at 36.5 and $35. On the VIX, we were down 4.59% as the VIX did get crushed back down below 30 yet again, lost the support trend line, and got another daily close at a lower low, so the trend of higher lows is starting to break, and we are seeing the VIX breaking out of the triangle wedge to the downside. This means fear could be leaving the market, which is obviously going to favor the bulls, so keep an eye on the VIX. As long as it's below 30, the bulls are starting to push in the short term. On Bitcoin, we're currently up 3.74% as Bitcoin is trying to get that bull breakout above 20,000 so it could get to the next price target at 22,000. But if we do see a rejection from resistance, this could be a double top, and if we do break the support at 19,000, that does mean we should have a very quick flush to the downside to the price target at 17,000. But as you can tell, this is high volume buying, so it does favor the bulls to get the bull breakout. So look for that breakout in the very near future for that quick chip up to the upside price target. On Amazon, we're up 0.65% today, and Amazon is at very critical resistance, which is going to be this zone right around 121. And on a bull breakout above 121, the price target will be the gap fill at 126. On a rejection, look for downside support at 118 down to about 115. And the support level right at 113. On Microsoft, we were up 1.38% today, and Microsoft did get a bull breakout above the 50 EMA, but we're sitting right here at the critical risk level, which is a critical resistance at 252. This was high volume buying, but we are at strong resistance. So if the bulls continue to push in Microsoft and break above 252, then we'll be looking for the upside gap fill, which is the price target at 265. To the downside, we still have strong support at 242 and the 20 simple moving average at 238. So you can continue to buy the dip as long as Microsoft holds above that 20 simple moving average at 238. On Nvidia, we are up 5.25%, and Nvidia is continuing to push to the upside and very close to the resistance just below 135, so that is going to be the next bull breakout. If the bulls in Nvidia push through 135, look for the gap fill in the 140s. Otherwise, look for a rejection from resistance and coming back down to the support at 122. On Tesla, we are up 5.29% as Tesla is getting a very strong bounce off of that level at 205, and we're right back up to the resistance at 222. The bears could show up here and try to drive Tesla back down to 205, and below 205, we will be looking for that next leg lower at 186.5. If the bulls continue to push higher, look for the next resistance at 230, and above 230, that will look like a bull breakout, which could take us back up to the 50 EMA. On Apple, we were up 1.93%, and Apple also got a bull breakout over two critical resistance levels, which was the 50 EMA and that risk level at 150. The next upside resistance levels will be 157 and then 164, and the downside support is now going to be 150 and 147, which is also our support trend line. The financials were up 1.2% today, breaking above the resistance level just below 33, and we are back over all the moving averages for the second day in a row. The industrials were up 1.35% today, closing the gap just below 91, and we are getting a bull breakout above the resistance trend line. The healthcare sector was up 0.76% today, breaking out above the resistance trend line and trying to close the gap above, which is just below 131. The energy sector was up 0.1%, finding resistance right around this zone, which was the gap fill just below 88. But we are still in a bull trend and we could continue to push higher as long as we're above 84. So jumping back over to the S&P 500, we are at very critical resistance, but the bulls do have control in the short term because they do have the advantage of an uptrend. Watch critical support because the bears are very likely going to show up at critical resistance levels, and they're not just going to roll over and die and give away this market to the bulls without a fight. However, the bulls do have a short-term advantage. Even though the bears will show up, that doesn't guarantee the bulls won't successfully break through resistance. So have an open mind, be prepared for any scenario, and let the price action do all the talking. Also, don't forget I have Bank Trade Alert, which is an algorithm-driven trade alert service that only trades the ETFs TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. If you want to learn more about Bank or want to subscribe, you can click on the link in the description of this video. If you're looking to become a better price action trader, consider joining the Stocks Channel Trading Discord community where you get access to all of my intraday updates and analysis. You can find out how to join the Stocks Channel Discord by clicking on the link below. Alright, here's a special update on Google for those of you that stuck around till the end, and Google did report earnings after the bell, so it is going to be in a very critical position. So we did get a bull breakout above the resistance trend line, and we did get the bull breakout, which was just above 102, and now we are coming into the resistance around the 50 EMA and this resistance level just below 106. So on a pullback, Google will need to hold this support right around 102 and the support trend line right around 100. Otherwise, it is very likely coming back down to retest the low just below 96 or making a brand new lower low down here right around 91. Now, there is also going to be an intraday low, which is also right around 94.38. So there is going to be a lot of possible support right around 94 to 95 if we do come crashing down. But so far, this does look like a bullish pattern of a double bottom breakout. So don't completely rule out the possibility that we could see buyers of the dip if we do indeed start breaking down below 100. You will want to wait for a daily close below that level. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.